Hi, everyone. Welcome to this episode of Money Moves. I'll start off with my overall thesis on the markets and the economy going forward. Then I'll go over each of my investing accounts, and then I'll finish up with my monthly tracker. If you like investing and making money, definitely like and subscribe. I make videos like this every single month, and I do my individual market reviews every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with the jobs market, we talked about this on Friday quite a bit, but the non-farm payrolls came in extremely high, more than double expectations, showing that the jobs market is still extremely strong, participation is higher than ever, and the unemployment rate is still extremely low, going back to 1968 as the last time that we were at such a low unemployment rate. So the economy in terms of employment is still very strong. The Fed is going to continue to hike. They'll probably keep rates as high as they say that they're going to. As long as the job market stays strong and the American consumer stays strong, service jobs continue to go up, we should expect that the Fed is going to maintain their course. They're going to raise 25 basis points, most likely at the next meeting. After that, they're probably going to pause, but they'll probably keep rates that high for a while. And there's certainly potential that they could even raise their longer-term hold rate if we don't see inflation continue down. With the economy staying as strong as it has, we could certainly see a little bit of a resurgence in inflation, but right now everything is trending down as expected. Moving over to earnings. Earnings have been decent. The biggest players obviously missed. Apple, Amazon, Alphabet, they've definitely struggled. Starbucks missed. Ford struggled. Qualcomm, lots of the biggest players have struggled here this earnings season. But overall, it actually has not been as bad as expected. We did see slight declines in earnings, but not major drop-offs like you would expect if the economy was truly turning down. So far, a soft landing seems possible, slight declines in earnings, some job losses across big tech, but because they hired so many people over the last year, it really is not a huge decline in comparison to the large amounts of hiring that they've done. From the data that I've seen, we've had about a 65% beat in terms of earnings, which is not terrible. It's not great, but it's not terrible. And that, in combination with the strong job growth, indicates that the economy is fairly strong and that the FOMC is still going to continue on their rate raising and keep rates higher for longer in most estimates. Moving over to my accounts, you can see I have worthy bonds here that returns 5%, a little over $5,000 invested with them. And I've earned quite a bit of interest here, a little bit over a few $100s. I did used to withdraw this money pretty consistently, so this is not everything I've earned with them. I've had this account for quite a few years here, and I still like this as a kind of an alternative to high yield savings accounts. These are all asset backed, and I haven't had any losses with them. I heard some people had issues withdrawing money, but I haven't had any of those issues, and so far it's been a good experience. Moving over to Groundfloor. Again, another company that I like quite a bit. I have a little bit over $10,000 with them. You can see my net earnings to date, $764. Continues to tick up. I've had no losses with them so far. Expected earnings on current investments, another $990. Most of these notes are not full year notes, and these are expected to expire before year end, and I could actually earn a little bit more than this before the year is over. And here's my note breakdown. Mostly C notes, couple of D notes, couple of B notes. Only 6 E notes here, high yields. Taking a shot on those, but we'll see. Otherwise, mostly C, and I've actually been adding a little bit of B notes here now that they're offering 10% on those notes. I haven't really been adding a ton of money here, but I do reinvest every dollar here in Groundfloor, and that'll keep the compounding going forward. Moving over to Fundrise, you can see I have almost $64,000 here. Did have a slight step down in January. We talked about that in my Fundrise video. They did lose a little bit of equity, which is expected. Real estate costs have been going up, and real estate values have been going down. Moving over to the portfolio here, you can see how that's broken down. Vast majority in growth real estate, small amount in income real estate, growth tech, which is their venture capital fund. I put a little bit of money in there. And then you can see about 16% of this is in Fundrise shares. Hopefully at some point Fundrise either goes public or they get acquired, and these shares will be worth significantly more than they are right now. But like I said, the majority is just invested with their standard program in regular real estate in order to benefit from the growth in real estate prices. Moving over to M1 Finance, I really like this platform. If I was a long-term buy and holder and I didn't have a government retirement account through TSP, I would use M1 Finance. They're a great company and I do like their platform quite a bit. You can see this account is almost at 20,000. I do have $128 here in cash. That's from Store Capital being acquired. So those shares were purchased from me and there's an automatic force out here. You can see all time at almost $3,000 gains. Looking at the month here, super good, up almost 5%, just under $800. And everything did fairly well. You can see real estate went up almost 6%. Vanguard dividend growth, almost 4. Midterm bonds here, 2.25, pretty good. Vanguard high yield dividends, 2%. Vanguard growth, which is basically the NASDAQ, up almost 9%. And then an international dividend account, 5.5%, and then regular stocks here 9%. So everything did pretty well this month. If you've been watching the markets, you knew that was going to happen. And I think I'm going to sit on this cash here for maybe another month or so and see what the markets do. If you've been watching my other videos, you would know I think we're pretty extended to the upside. It's certainly possible that we could hold a higher valuation than we have been. I don't necessarily think we're going to go back to the October lows, but I think there will be some kind of a retrace of this large move that we've had here recently. Moving over to my TSP account, this is my retirement account through the government. You can see I have about 6% cash, 4% bonds, and 90% stock. When they say cash, they mean government bonds, not actual cash, and you can see that here. This is government bonds. You can see the fund price. Makes a little bit of money every single month, does not take any losses because it is government bonds. And then we have corporate bonds here making a little bit of money. And then I have stocks. This first one is the S&P 500 at 44,000. And then this is a total stock market fund at 36,000. This is obviously a very large account for me and I don't really have any plans to change it right now. I am buying heavier into bonds here recently. I do think bonds are a little bit underpriced. I've talked about that quite a few times over the last 6 months, but I still think bonds are a little bit cheap. This is really where I'm buying bonds the most. But you can see here, I still have a lot of stock. I have a lot of time before I retire, and I want to continue to add into my stock holdings. This is really where I do most of my buy and hold investments. Moving over to my Tastyworks account. If you watch my daily videos, you're familiar with this account. I do trade it every single day. I think what I'm going to do with my IRA here is I'm going to start using the wheel strategy a little bit more diligently. That way I can keep gaining theta in that account and pretty much only trade my individual account. I think that's really going to be what I'm going to have to do going forward. I can't short in my Roth the same way that I can in my individual account. It gets a little bit harder to trade that. So if I can just stick to the wheel strategy and time my entries a little bit better and pay attention to the markets that way, potentially I can outperform slightly, but really do just a little bit better job than the overall market returns. I do only have 27,000 in here, so I can't trade the major markets like the S&P or the NASDAQ because the QQQ has gone up so much. Might have to stick to the IWM for now, so we'll see what happens with that. Otherwise, looking at my individual account, like I said before, I trade this every single day. Did step down here over the last month. I was not sold on the bull run, and we'll have to see what plays out going forward. If you want more information on that, always check out my daily videos where I talk more in detail about what I think the markets are doing. Moving over to my monthly tracker, you can see stocks and trading switched again. So we had a big step down in December. My trading accounts did well. Stocks rallied. I didn't do as well in my trading accounts as stocks. And you can see those percentages here. Stocks went up almost 10%, almost 9.5% in that area. Bonds went up 3.3%. Real estate holdings up 1.53%. Lending Club continuing to liquidate that position over time. Cash basically flat. And then trading account, you can see, took a hit this month. Definitely not what you want to see, especially with the good returns that we had overall. And then looking at my total account values here, setting another record at 283,646. Nice little step up. That is my all-time high for invested money. Took a step back on 1 January from the December high. And then here on 3 February, basically at market highs, hitting 383. Like I said before, I expect stocks to take a breather, probably move down fairly large, but we'll see how that all plays out. Let me know down in the comment section what you think of my investing accounts. If you want an open account with any of these platforms, definitely use the link in the description. Really helps out the channel. Definitely comment down below if there's any investing platforms you would like me to cover. And definitely like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your investing and have a great day.